Joining me now is Rick Pickeren, Chief Global Strategist at Pickeren. Welcome back to the show, Rick.
Hey, Ashley, how you doing? It's great to see you again.
Great to see you again. So you've said this before, and we've had this conversation, that investors are very emotionally involved in the markets and politics. Can you talk a little bit more about how they should be navigating the government shutdown through that context?
Well, it's a super interesting time, whether we talk about the tariff scare we had in April or now what seems to be much less of a shutdown scare. Although it's funny, some of the past shutdowns have really had a bigger impact on the psychology of the markets than I think this one is having right now. But our work shows that shutdowns generally are pretty temporary and have sort of a random impact on the market, whereas, as I said before, our investors are long-term, and if you have your long-term hat on, you should be really looking to things like this enthusiastic IPO market that we just saw this morning, how the Fed and monetary and fiscal policy are working through the markets. That's going to help you, whereas trying to second-guess politics and second-guess what's going on in Washington is going to be trickier.
And what are some ways that investors can take the emotion out of investing and stay cooler?
I think, it's funny that you asked me that question, because I think for the lion's share of my career, one of the big parts of my job has been helping my clients do just that. Whether it was 1999 and the momentum in the market felt like the enthusiasm we see down here on the floor today, whether it was 2008 when people were telling us you should never buy equities again, to try to keep an even balance and look at the real great investors of the world, the long-term investors of the world, and how they apply that level-headedness to how their investment policies, I think, gives you the highest probability of success.
All right, and we're coming off of a winning Q3. The S&P gained 8% over that span. What are your expectations or predictions for Q4?
When I was here about 6 weeks ago, we talked a lot about the strength, the technical strength of the rally with the seasonally weak September coming up. And, we've made it through that seasonally weak September, and the market didn't go straight up during that period of time, but it's still technically very strong. We end up with an 8% quarter. We've got some seasonality in front of us in November and December that's generally strong. Some momentum against the backdrop of an overvalued market. Some people argue it's egregiously overvalued. Some people argue it's modestly overvalued, but I think it's fair to say that it's overvalued. And the Pitcairn position is that really momentum is a better short-term indicator of directionality than valuations. It can stay overvalued for a long period of time, and I think investors are making a mistake to get too scared of this market right here.
And given everything that's going on, what are some of the questions that your customers have for you now? Anything that's coming up, any patterns you're seeing?
I think you still have some stagflation concerns, some long-term inflation concerns. The stag part of stagflation, the economic slowing, it's a harder argument to make. I think if you look at the data for the third quarter right now, most analyst estimates are going straight up. The Atlanta Fed GDP model is going up, so we're looking at high twos or something like that for the third quarter in GDP growth, which is nowhere near a stag or any kind of any kind of a recession. Inflation, still another question that's out there. I think geopolitics, since we last got together, we've had this horrible assassination here inside the country that makes our political system look more polarized. We've had continued aggression with Russia and different venues of the world. And I think that's worthy of notice because it can butt in on the capital markets. But I still think our overarching advice is to keep that long-term hat on and make sure that you have a diverse portfolio and you'll make it through these periods of geopolitical unrest with success.
So Rick, the Fed is going to be meeting again at the end of October. Given the fact that we may not see this jobs report on Friday, how do you think they're going to be factoring that in?
It's funny, I was on last time and I said, if they had the June meeting to do over again, because the BLS data came out after they met and showed a little bit of a weakening job market, they might have wanted to cut in June, which they didn't. I believe that regardless of whether they got that data or not, their bias is a little bit softer right now. They're probably more inclined to cut and to not. And while it had an impact on the market, I'm not sure if it has the biggest impact of the market right now. And I think if investors are thinking with their long-term hat on, it might be really interesting to think about a period of time where we're transitioning from the Fed and Fed policy, monetary policy being the thing that really dictates the directionality of the market, moving to fiscal policy and what we do with our debt and how the government really approaches this $37 trillion of debt as to be the stronger indicator of market directionality.
All right, do you think we'll see a rate cut in October?
I do. I think they'll cut 25 in October. That's a little bit data dependent. It could be that they decide to stand pat. My guess is they do one and probably not anything else for the rest of the year.
All right, Rick Perkaren, Chief Global Strategist at Perkaren. Thank you so much for joining us at the New York Stock Exchange.
Great to see you, Ashley.
Great
Take care.
to see
Have
you
a good
again,
day.
Rick.
Yeah.